I'll start with quick introductions. So first of all, I'm Edward Zouein. I'm the CEO and Managing Director of Lombard Odier in the Bahamas. For those of you who don't know, we've been on the island for 45 years, so a very long history on this island. We're very committed. We've built over decades a big business that we're proud of, and most importantly, we see gigantic opportunities going forward. To my left, Geoffrey, I don't think you need an introduction, but for those who are traveling from abroad, Geoffrey built a huge conglomerate with the Bahamas at its center, spanning corporate services, fund administration, banking, and you keep adding new verticals. So we're going to talk about that during the session. And Lamine, Brahimi. So Lamine, you flew in specially for this session from Switzerland, so thank you very much. Lamine started his career at McKinsey, then joined Lombard Odier. Your last job was heading our digital and tech platform, and then one day you decided to jump off ship and found a digital assets platform, which is today one of the leading, if not the leading, digital assets platform in the world. So I'm quite privileged and happy to have you both on our panel. If we start with the first question with you, Geoffrey, we were saying that you've built a conglomerate, tons of verticals, tons of geographies. I think it would be good to hear in your world how did it all start, your early beginnings in Brazil, in Argentina, until this present day.
Thank you very much, Edward. It's, we're only small. Huge is not a superlative that I use anyway. It's a long time ago. I came to the Bahamas in 1984 to work for Roy West, and I'd already been 5 years in Latin America, which is why they hired me. And to echo the Attorney General's words, you know, I said to Roy West, if you want me to do business in Latin America, I have to be in Latin America. Sitting here in Nassau, as nice as it was much more difficult to bring clients here. So I went down to Uruguay to set up their subsidiary, and that was a great experience. And I was there until the Royal Bank bought out, NatWest bought out the Royal Bank. And I went back for a brief period to Lloyd's International Private Banking. I used to work for Lloyd's in Spain before coming out here. And it was that transition, because the nature of the business that Lloyd's wanted to do, and essentially the nature of the business that I was, or at least I thought I was quite good at doing, was different. Lloyd's was very much more private banking focused, asset management focused, your sort of business. And there I crystallized ideas that I'd had for a long time to set up my own business. And so Winterbotham was born at the end of 1990 in Uruguay. And I happened to be in Uruguay, and therefore it was convenient looking at the two big markets. And what I'd noticed in the nearly 10 years that I'd been in Latin America was that the financial world, particularly the offshore world, while, I mean, there were plenty of international banks running around. I arrived at a time in the 80s when international bankers were traveling to Latin America with suitcases full of money and throwing it at borrowers in Latin America. So this was all prior to the first debt crisis, when people realized that countries could go bust. And it was the difficulty I saw of entrepreneurs to operate their companies, and particularly those that were beginning to look across border with such tremendous volatility, economically and politically. And I figured if one could deliver this nebulous concept of offshore, which doesn't exist anymore, of course, but it did, and looking at it through the optic of those days, 30, 40 years ago, if one could deliver in their own language where and when they needed the service they were looking for, that was a real opportunity. And that was the starting point for Winterbotham. And that impacted both entrepreneurs of manufacturing, services, businesses, as well as the banks, the regional banks. And I've been able to do a lot of work with regional banks at Roy West, and that activity followed me together with 5 or 6 clients.
You mentioned a few countries. I mean, geographic diversification seems to be key for you to acquire new business, grow new clients. It's been on the cards. Can you give us a few examples of ventures, countries?
We've never really subscribed. I've never subscribed to sort of being, trying to be in every jurisdiction, to be a kind of one-stop shop. Latin America was the regional focus that I'd had prior to setting up Winterbotham, and it was where I felt we could make it work. And it was where I knew most people. And to a large extent, the development of the business in the early days was who you knew. But I mean, to get to know people, you know, I wore out a lot of shoes on the pavements of Sao Paulo and Buenos Aires. That's the reality, knocking on doors. But little by little, and with the help of 1 or 2 contacts. So the vision, to begin with, was Latin America. And we have clients in most countries in Latin America, although the concentration, the focus has been particularly in Brazil and the other larger economies.
Okay. Before we dig deeper with you, Geoffrey, maybe Lamine, we can move to you. I mentioned that you're a senior leader in a traditional financial services firm. You decided to jump off, start your own business. What drew you to the digital asset space?
Yeah, so good morning, everybody. Pleasure to be here. As you said, you know, I was a colleague of Edward, actually almost a decade ago. And I was responsible of all the digital initiatives globally of Lombard Odier Private Bank. And actually one day, I got a call in 2016 from the Paris office of Lombard Odier. And the topic was, it was a female-only event, by the way. It was Lombard Odier Paris that was doing things for their female clients. Was, you know, there is this Bitcoin thing as responsible for the digital initiatives. We would like you to give an introduction of Bitcoin at the time. So I was there, I went there, and being an engineer by myself, I was looking at it remotely. I dove into it, and I got interested. And ultimately, we identified, I would say, 2 things. One, that, you know, robust infrastructure was missing at the time. And 2, for those, I would say, high net worth or ultra high net worth clients to have an exposure to digital assets, that world didn't exist at the time. This business needed to be regulated sooner or later. That's why Mr. Attorney General already back in 2020 released the first, version of the DARE Act. And Switzerland at the time was probably the first jurisdiction in Europe to define and enact the first, I would say, robust regulatory framework. So based on this, and with a couple of good friends of mine, we decided to create Taurus. And Taurus, we do 2 things. One, we provide digital asset infrastructure to protect digital assets, whatever they are. It can be cryptocurrencies, it can be tokenized securities, or it can be even digital currency, so tokenized cash. And the second one, we stick to a world. We got ourselves regulated, so we have FINMA. FINMA is the Swiss regulator, license to trade tokenized securities. But really, at the time, it was a deep conviction, right? We were kind of taking a big bet that traditional assets and digital assets would converge, and that banks will play a role. It was, I would say, at the time, easier said than done, because no bank at the time had entered the space. But today, as you know, BlackRock, has issued the fastest growing ETF in history, Bitcoin, and has tokenized their first funds, and a couple of very, very large financial institutions are using our technology to provide those services to their clients.
I mean, the vision we understand, but it takes quite a bit, I suppose, to turn this vision into a reality. It's a tech business, it's all about the product. How did you crack the nut?
You need to have a bit of luck, right? We had a very good founding team, so covering the three main domains, banking. I come from a banking background. A fellow co-founder came from the hedge fund industry. He was the CEO of Brahimi Howard, at the time the largest hedge fund in Europe. Another good friend spent 6 or 7 years at FINMA, the Swiss regulator, so we had also a very good regulatory understanding of what's might happen. And the last one is one of our co-founders is our chief security officer. Some of the algorithms that run on your mobile phones have been designed by him. So we had a very good, I would say, founding team covering financial services, regulatory, and I would say technology and security. And this helped us obviously hire and attract extremely good talents. And what I'm very proud of is, I think out of the first 20 colleagues that we hired, actually all of them are still with us today.
And when one look at your website, I mean, many of the big names in the banking industry, if not all of the big names, are actually clients of yours. I mean, I can think of Deutsche, Crédit Agricole, most recently State Street. I mean, these are global custodian quoted by every single digital assets, infrastructure, or platform. I mean, how do you do it? How do you get a seat at the table? And how do you ensure in a very competitive tech world that you maintain the seat and you continue to be competitive?
Yeah, I'll tell you a story. It requires obviously hard work, dedication, but also a bit of luck. You know, initially we always wanted to focus in Switzerland before going, I would say, overseas. So our strategy was on purpose to focus in Switzerland because the regulatory framework was clear and there was demand. Initially, there was a lot of competition. Most of all our competitors in Switzerland have gotten acquired. And initially, you know, there's Zurich and obviously the French-speaking part. We come from the French-speaking part of the country. And, you know, the German-speaking part is obviously looking a bit down on us. So initially it was, you know, those Swiss romans. Don't look at them. You know, they are like 5 or 10 guy shop. Then we started getting medium-sized banks, and then they were saying, don't look at them, they only work with small and medium-sized banks. Then we started getting the first very large banks, and things have changed, right? They were saying, pay attention, they are not well-funded. Then we raised like a $65 million Series B, and things have actually switched. So there was a bit of, I would say, fair game in terms of competition, but I think what was systematic on our end is we were 100% focused on the product. I think we have managed to build the most complete platform in the industry. And we had people, as I said, that knew how to talk to banks. We were not, if I may use the word, crypto bros that kind of trying to navigate their way. And we also have, you know, zero tolerance for security. So I think the combination of having a very good product, but also having people that know how to speak to banks, I think that made a difference in the end.
Thank you. So we talked, Geoffrey, about geographic diversification and the countries you've been after, but also when we look at the different verticals, you kept adding over the years new verticals. So you started with corporate services, trust services, fund administration, most recently corporate finance, and the sports world. Can you tell us a bit more about this decision-making process? Do you tend to be proactive, reactive? It would be better to understand kind of what goes on in your head to make those growth decisions and how they played out as well.
They were really just developing the vision that I had when I started. And I knew when I started that we had to have a bank and trust license here in Nassau. And when I did start, I didn't have the capital, even back in those days when the requirements were a little bit less than they are today. But we were able to generate that in profits. So I started the company with $7,000 for a couple of desks and PCs and stuff. So the rest has been generated organically. So if you look at our balance sheet, we have never borrowed any money. So unlike the way companies grow today, Winterbotham has grown by brick, each brick being a client, and I guess you could say the cement our staff. But it's been a slow, laborious project. You know, we're 34 years old, 31 here in the Bahamas. And what you see is in our financial statements, which we've always published since we got our licenses here. So the whole vision at the beginning was a bank and trust offering a full range of financial services. So we put those in place as and when we were able to do so, and it seemed to make sense. So if you like, the decision, it was already made. I was not from a securities background, so for example, Ivan brought that on when he came on board, as he had much more background in securities, and of course, he has added amazing value to our diversification. Corporate finance, I mean, we've always been involved in corporate finance. We were never a manufacturer of companies and resale of companies. Our whole business was based on providing a solution. I know it's a very worn phrase, but we needed to add value. We needed to make the offshore company work. When I started, I met people in Latin America who had bought companies from wholesale vendors of offshore companies, and they had it on their shelf as an adornment. But they didn't know how to make it work for what they wanted to achieve in Latin America. And this was what we were able to bring. So SPVs as part of cross-border transactions in Latin America, M&A, divestment, whatever it might have been. We were the provider, obviously not of everything that was going on, but the point is I saw the opportunity to, if we could provide more services of generating more revenue. Took us a while, and really, again, it's thanks to our CEO that we have been able to develop now a fully competent corporate finance division, which is 72 Global.
When you talk about 72, the sports management business comes to mind, which is quite new or relatively new in your world. Can you tell us more about it? Why sports?
I can tell you a little bit about it. It's not, again, this is all pretty new, but following, you know, the Attorney General's thought on innovation, we've always tried to innovate where we are. So there's a lot of, we talk about corporate services. To me, what we talked about was structured transactions inside the company. And corporate structure's there to do a job. It's not just there for its own sake. And within corporate services, there's a lot of derived products and services that we offer, and I'm sure you all do. And so we've had athletes as clients over a number of years, and Ivan saw an opportunity to make this a broader avenue for our development. Of course, he's a passionate sportsman and sports fan. So there's nothing like working and enjoying what you do. And we had an opportunity to enter into a joint venture with some professionals. And 72 Sports Management was born. And it is an avenue to clients and intermediaries that we haven't hitherto been able to exploit, and being fully involved now at all levels with athletes and their lives and their business activities opens up new opportunities.
Lamine, the area that get many of us excited in the digital asset space is tokenization. Tokenization of art, tokenization of real estate, tokenization of private assets. You've built a platform that allows the issuance and tokenization, as well as a regulated independent marketplace, TDX. Can you walk us through your vision for TDX, for tokenization over the next 10 years?
Tokenization is, I don't know whether the mic works. Yeah, tokenization is nothing else than digitization of a security, except that you book it on a distributed ledger technology or on a blockchain. Our conviction today, if you look at the crypto markets, the total market cap is roughly 2 trillion. For this industry to go from 2 trillion to 20, 30, 40 trillion of assets, you need to digitize private assets, especially. Right? It can be, private companies, it can be real estate, it can be private debt, it can be art, it can be those types of things. True, we created initially the custody platform, which allows clients to protect their assets. But soon after, by the way, back in 2020, BlackRock only issued their fund 6 months ago. We stick to words and to our, to our conviction. And in a way, as the Attorney General said, and also as Geoffrey mentioned, we still keep innovating. So we said, okay, custody is great. How can we allow clients to create products? And the law in Switzerland had been enacted that would allow clients to tokenize securities and book them on a blockchain. So we created that platform in 2020. I'd say it's still in the early days, but I'm very happy that our clients and ourselves, we have tokenized the full spectrum of financial instruments. So we were among the first to tokenize equity securities, debt instruments, trade finance transactions, real estate, structured products. We made an announcement yesterday, one of our private banking clients has tokenized an art piece that they distributed. And State Street and Crédit Agricole, CACEIS, this is public info, going to tokenize funds. So for us, it's super important to be able to serve our clients and to anticipate their needs. So that's why we build that. And we really believe that in the next, I would say, 18 to 36 months, you're going to see a massive increase globally in the assets that are booked on a blockchain. It has a couple of benefits, right? You can transfer them immediately if, for example, today you want to put in collateral money market funds for, I would say, derivative transaction or structured transaction. Moving that collateral from one global custodian to the other takes 2 days, at least in Europe, maybe 1 day now in the US. If you do that in a tokenized way, it takes 20 seconds. So in terms of liquidity management, counterparty risk management, collateral management, the, I would say, advantages are huge, assuming there's a big assumption that most players enter that space. I don't want to cover more benefits in terms of 24/7 trading and transferability, but that's very important. What you need to have in addition to that is regulated marketplace to trade those securities. A security cannot be traded on a crypto exchange because they do not have the license to deal with securities. So that's why we built a regulated marketplace called TDX. And we are hoping that when it takes off, we will be one of the first to benefit from this new wave of, I would say, financial innovation.
Do you see any regulatory blockers? I mean, what are the industry-wide enablers to get to this vision? Any regulatory prerequisites that you can think of?
The number one prerequisite, otherwise none of what I'm talking about will happen, is having robust regulatory framework, which we have here in the Bahamas, which we have in Switzerland, and which also the European Union has enacted. One of the, if not the largest financial center, the US, is lagging. So we hope, so I'm going to the US tomorrow. People are saying that after the elections, end of this year, things are going to clarify. But it's super important that all the key financial centers adopt, I would say, constructive regulation for those big custodians, banks to enter the space. We are very confident that this will happen in the US. It's already the case in Europe. And a couple of catalysts would be, for me, to have not only the securities side on-chain, I've mentioned all those financial instruments, but the cash side on-chain. So we need to be able to pay dividends, coupon, corporate actions to have that on-chain. It is technically possible. We just need, as Attorney General said, a couple of big players to act, to have large-scale tokenized cash on different currencies. And it can be US dollars, it can be euros, it can be GBP. We're going to see an announcement in a couple of weeks with one of our clients that is going to tokenize British pounds. And we need to have that in all the key foreign currencies.
Maybe a question on the outlook of the different kind of verticals in the digital asset space. I mean, we have the cryptocurrencies. It would be interesting to hear your views, of course, at a high level. CBDCs that were kind of, a lot of people got excited initially. Now, kind of, there's less and less traction because some people realize actually there are pros, but there are also cons. It would be good to hear your views on this. And then in the tokenized space, I think we've talked about it quite a bit, but maybe one example of the most exciting thing you worked on that would be helpful for the audience.
Yeah. So, it really depends on your risk tolerance and regulatory framework and what you want to do or not. But I'm going to say what we really believe at Taurus. Cryptocurrencies are here to stay, whether people like it or not. It's going to continue to grow, and it will be increasingly part of small allocation in portfolios. For us, the big catalyst, as we said, is tokenized securities. It's going to take, as I said, maybe 18 to 36 months, but you're going to see a bunch of assets being on-chain. And tokenized cash, we just alluded to it. I think it's very important that central banks innovate themselves and test the technology. I don't think the industry needs central bank digital currencies. I think the banks are, manage to transfer, funds between them, at least within their own jurisdiction in a few seconds. I think, the world needs tokenized commercial money, as I said before. So I think CBDC, I think it's very good to have central banks on board, but I don't believe that's what we need in the industry.
Geoffrey, it's a very competitive industry we're in. It's actually cutthroat when it comes to business, when it comes to clients, when it comes to expansion. What are your 2 cents on retention when your clients, for example, are most probably quoted every day by the competition?
Yeah, competition's a real problem. It's tough, but the essence for me, I believe it's still the essence for the company, the relationships. But it all starts with the people. I mean, Winterbotham wouldn't exist today if it hadn't been for the first person I recruited in Uruguay, where I started, and subsequently '94 here in Nassau. You can't do it all yourself, and you have to have the people that believe in what you're doing and how you're doing it, and you have to build that team. So that's critical. Staff and clients, and then you have to build the relationships with clients. If you have the relationship you should hopefully be able to identify, when something is threatening your relationship with that client. It's not easy, of course. And anyway, one doesn't have all the business from any client. Typically, you're providing and covering off some of the needs, and you're not necessarily there to try to get all the clients' business. What you need to do is to find the way that you can add value. Our biggest challenge, I think, Edward, today is the generational change. So we're seeing some of our largest clients where the children are beginning to take over some of the family activities. And of course, those children come from or have had different backgrounds. They have their mates who've become attorneys here or bankers there, and therefore that may be a stronger tendency rather than going to the source that their father used or something of that nature. And we have our own generational change in the business, and that has been very well, I think anyway, implemented within the company and has had enormous significance in terms of how Ivan and the team have managed to grow the business when I went out to the Far East. And one can see the relationships within our client base that have developed as a result of that generational change. There are a lot of nuances, right? Obviously, in retaining clients, we all use that very enigmatic word of service. What does that mean? You need to know what your client wants and give it to them. And if you do that, then the chances are you're going to keep them. A bit unlike yours. Once you've invested in your system, there's no way out, right?
Yeah. Competition is everywhere. Yeah.
So from a jurisdictional perspective, Geoffrey, what do you think the priorities should be here? Do you feel that we're putting our finger in all the right places? Do you feel there are gaps? What should be the key priorities, in your opinion, for sustained growth?
Well, I subscribe very much to what the Attorney General was saying. You have to get out. You have to go and talk to people. Obviously, people do come here. A lot of people come here. When I first came here, hardly any visitors from Latin America, and now there are a lot, and we have a flight from Panama and so on. But you've got to get out. You've got to go out and tell people what you're doing and about the jurisdiction. And there are lots of opportunities. People take time to make decisions. They want to see credibility. How do you achieve that credibility? When you live on an island where they don't go, you need to go and see them. If it's necessary every week, every month, every other month, 5 times, whatever it may be. You also have to know enough about their context in the environment that they're living. What are the problems? What are they trying to achieve? Obviously, we relate to domestic players in the markets that we're trying to do business in. Because those domestic players are trying to do business with their own clients on an international basis. So that sometimes represents competition. But there are a lot of opportunities where, as a jurisdiction, we can be complementary. I think some of the new products that were developed, you could put them into that sort of context, the smart funds and the Icon and so on, which work and enable local operators who become partners to develop their solutions for their clients.
Same question to you, Lamine. From a jurisdictional perspective, what do you think our priorities should be here in the Bahamas to ensure we become the destination of choice for entrepreneurs in the digital asset space? looking to build businesses here, but global businesses with Bahamas at the core.
Yeah, Attorney General summarized it actually perfectly. I will really double down on what he said, and looking at what other jurisdictions have been doing too. You know, we are present now in 7 countries. Obviously Switzerland, the UAE, Turkey, France, Germany, UK, and Canada. I think what's super important is to have not only a clear regulatory framework, but also that adapts. You know, in our industry, things are moving fast. You have FATF regulations, you have sometimes G20 regulations on stable coins, and it's very important that the Bahamas, from our little vantage point, I don't see that at all as an advice, but it's just an observation that really remains at the forefront of, you know, regulatory innovation, allowing not only banks to enter the space in a safe way, but also to protect investors and manage risks properly. There is no debate about that. And we believe that regulatory frameworks are obviously necessary, but they are not sufficient. We need to define international standards, and maybe the experience of Switzerland can be helpful. When, you know, some of our clients, law firms, even Big Four companies and auditors, you know, started looking at tokenization, we were missing standards to tokenize securities. Concretely, you want to tokenize an equity instrument, what do you need to do in your articles of association? You want to tokenize the same equity instruments, which smart contracts are you going to use? We solved that already 4 years ago. So today in Switzerland, if a company in Zurich, in Lugano, or in Geneva wants to tokenize an equity instrument, the blueprint exists, the smart contract exists, it reduces costs on the issuer side, it also reduces costs on the custodian side. So I think having a similar approach at the right time in the Bahamas and also contributing to setting up international standards would be something I would believe helpful for the financial industry in the country. And voila, I think that's about it. We have been really privileged to already work here in the Bahamas with people that have trusted us already 2 years ago, Capital Union Bank. And I encourage the other banks to look at the space because, you know, there is latent demand that can be captured.
Thank you, Lamine. So I believe we have a good 5 minutes for questions, if there are any from the audience. No questions? Well, thank you. Thank you, Lamine. Thank you, Geoffrey.
Thank you.
It was a pleasure.
Thank you.